Hey guys, Michelle Kinney here. Thanks for checking in. Thanks for checking out my video. I'm gonna make a super quick video and talk a little bit about the differences between trading stocks and trading stock options. If you are only trading stocks, you are literally doing it all wrong. There is a better way. When you trade stocks, first of all, you only make money generally if the stock goes up. You could short a stock, so if you think a stock is gonna go down, you can sell it short. I'm not really gonna go into a lot of detail about that. But most people, when they trade stocks, they're referring to buying stocks, and you only make money when it goes up. Well, what about when it goes down or when it stays sideways? Then what are you doing? You're just sitting around, right? Also, even when a stock goes up, you don't actually make any money. You don't actually put any cash in your pocket until you sell your shares, because it's a paper gain until you sell your shares. There's a big difference between a paper gain and a realized gain. A realized gain comes when you sell stock options. You're actually putting cash in your pocket right then and there to make the trade. I'm gonna go over that in more detail throughout this video. Okay, what if I can show you a way that instead of buying ABC stock, hoping and praying and waiting some indefinite amount of time to actually make any money, you can make money right then and there and put cash in your pocket right when you make the trade. That is selling options. So there are only two strategies that you need to know: selling a put and selling a covered call. It might sound confusing, but it's super easy to understand the basic fundamentals. Selling a put, you choose the stock that you want to trade. What stock do you like? What you're doing is you're taking in money, it's called premium, and you're committing to buy shares of that stock if the stock drops below a certain price. And guess what? You are choosing the price at which you want to buy it. So you choose the stock, you also choose the price at which you want to pay for the shares, and you choose the length of time for the contract. Generally, I trade 1 week contracts for a couple reasons. Number one, I don't want to tie up my capital for an extended period of time. And number two, I want to make income every week because I got things I got to pay for. So I'll give you an example. I like ABC stock, but I don't want to pay $100 where it's trading at now. I would sell, let's say, a $90 put. I'm getting paid money, let's say $100 or whatever the premium is. I'm committing to buy that ABC stock if the price drops below $90 before it expires on Friday. If the price doesn't drop, I don't buy the shares. Either way, I keep the premium that I'm paid. Why would you go to the marketplace and pay retail price on a stock that you like when you can sell a put on it instead? It's crazy. The other strategy, like I said, there's only two strategies that you need to know. The other strategy is selling a covered call. Let's say I already have 100 shares of ABC stock, and let's say I paid $99 for those shares. I can sell a $100 call that expires Friday. What that means is that I'm committing to sell my shares if the share price stays above $100 before Friday. If it doesn't go higher than $100, I keep my shares and I also keep the premium that I'm paid. And then guess what? Next week, I sell another call on the same shares. I'm not saying it's magic, but it's as close to magic as you can get. Listen, option selling is like literally the best gig in the world. Number one, you don't have any employees. Number two, you don't have any customers. Number three, you can literally do it from anywhere. All you need is a laptop. It's amazing. And you create yourself income every single week. Why in the world would you be trading stocks, buying some stock, hoping and praying and waiting some indefinite amount of time for the shares to go up? Then you have to sell them in order to make money when you can simply trade options. It's such a better way. The only people that don't trade options are the people that don't understand how to do it. And it's not that hard to get it. Like I said, two strategies: selling a put, selling a covered call. I have tons of videos right here on this channel for free. I do tons of live events for free. Next week, I'm starting a live stream where I'm not only going to walk through selling a put as an example, or buying 100 shares of stock and selling a covered call against that, but I'm also gonna walk through managing that trade. What does that look like while I have that trade? Should I close it early? How would I do that? What are the advantages or the disadvantages? How about when they expire? I'm gonna walk through that step-by-step live Monday, Wednesday, Friday, 3 o'clock Eastern time, starting next week. Make sure you're there because you're gonna learn tons of information. Also, before this video ends, I wanna tell you another thing. A lot of times people talk about taxes. Well, how does that work with taxes and options trading? Here's the thing with taxes. You are gonna pay short-term capital gains. That's a fact. But don't but don't not trade options because you have to pay tax on it. That would be crazy. That's like having a job and your boss wants to give you a raise, but not taking the raise because you're going to pay more in taxes. That's absurd. Whoever heard of such a thing? There are ways that you can minimize your taxes. For example, I trade in an S Corp. I get to take expenses that I wouldn't otherwise take. So there are other ways around that, but owing the IRS at the end of the year, that's actually a good problem to have because that means you made more money. Anyway, I hope that helps. If you like this video, smash the like button. Subscribe to my channel. I'm literally putting up a video every single day for 1,000 days, talking all about selling puts, selling covered calls, walking through different tickers. Like I said, next week, I'm going to start this amazing live stream where I'm going to walk through having the position and managing that. So I'm going to show you exactly from the beginning to the end so you can do exactly what I do. Listen, I don't have a day job. I just trade options and I make money that way. And I've been doing that for years. I've been doing that when the market's going well, when the market's going down, when the market's staying sideways. You can literally make money in all market cycles when you trade options. The key is this: don't overextend yourself. So I'll give you another couple perks in this video. I only trade a handful of tickers. Listen guys, you don't need to be trading like 10 different things. You also don't need to be looking at like all these different chart patterns and having all these crazy indicators. No, just start with one ticker. What is the one company that you like that resonates with you, and start with that. And then don't trade like multiple contracts. Start with one. Listen, sell a put that's kind of far away from where the stock is trading on a stock that you like anyway. If the stock drops, you end up buying the stock that you like on sale. Then you can turn right around and sell a covered call against it. That's called the wheel. That's a great strategy. The advantage of only trading a handful of things, or even one at a time, is if the stock goes down, listen, we don't know if the price is going to go up or down. I don't have a crystal ball and I can't tell the future. So if you're only trading like one contract at a time, if the price goes down, you can sell another put as it goes lower. And if you get assigned those shares, you're averaging your cost down. These are all the things that I talk about in all of these videos here for free on YouTube. So anyway, I hope that helps, guys. Happy trading.